Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 7 undervalued growth stocks for potential 10 times returns by 2030. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. The cornerstone of successful investing lies in patience, a virtue that can often yield greater returns than any other market factor. By staying invested in the right stocks and weathering short-term fluctuations, investors position themselves for long-term prosperity. In an era marked by uncertainty, the ability to maintain a steadfast approach to investing is paramount. Furthermore, patience allows for the power of compounding to work its magic over time. By reinvesting dividends and allowing investments to grow organically, patient investors can harness the exponential growth potential of their portfolios. Now let's delve into the heart of our discussion. Number 1. Li Auto. Li Auto emerges as a standout contender among the most undervalued growth stocks with the potential to soar until 2030. Despite recent turbulence in the Chinese markets, we anticipate a substantial uptick in Li Auto's stock value once stability returns to the region. What makes Li Auto particularly appealing are its robust fundamentals. As of third quarter of 2023, the company boasted a staggering cash buffer of $12.13 billion, underscoring its financial strength and resilience. Moreover, the company's free cash flow, FCF, for the quarter stood at an impressive $1.8 billion, signaling a healthy cash generation capability. Looking ahead, the growth trajectory for Li Auto appears promising. With ambitious targets set for 2024, including projected vehicle deliveries of 800,000 units, the company is poised for significant expansion. This target represents a substantial increase from the 376,030 vehicles delivered in 2023, highlighting the company's aggressive growth strategy. One catalyst for this anticipated growth is the commercial launch of Li Mega, scheduled for March. This product launch is expected to fuel stellar growth in deliveries, further solidifying Li Auto's position in the electric vehicle market. Li Auto's robust fundamentals, ambitious growth targets, and impending product launch position it as a compelling investment opportunity with the potential for substantial returns in the long term. Number 2. Miniso Group. Miniso Group presents itself as an intriguing opportunity for investors seeking undervalued growth stocks with the potential for significant returns. Despite experiencing a sell-off from its highs in September 2023, this downturn may actually represent a favorable accumulation opportunity for savvy investors. As a lifestyle retailer with a global footprint, Miniso distinguishes itself through its attractive pricing strategies and diverse product offerings. This approach has proven successful, as evidenced by the company's robust financial performance in first quarter of 2024. During this period, Miniso reported impressive revenue growth of 36% year-on-year, amounting to $519.6 million. Additionally, the company saw a substantial 52.8% year-on-year increase in adjusted EBITDA, reaching $139 million. Such healthy revenue expansion has been paralleled by a commendable expansion in EBITDA margins, further underscoring Miniso's operational efficiency and growth potential. Furthermore, Miniso's aggressive expansion strategy is evident in its global footprint, with a reported 6,115 stores worldwide as of first quarter of 2024. This represents a notable year-on-year increase of 819 stores, signaling the company's commitment to robust revenue growth through both domestic and international expansion initiatives. Particularly noteworthy is Miniso's focus on expanding its presence in key markets such as China and overseas, further bolstering its revenue-generating capabilities. Moreover, investors may find Miniso's dividend yield of 2.53% to be an attractive feature, providing a source of income in addition to potential capital appreciation. With expectations of healthy dividend growth in the coming years, Miniso offers investors the opportunity to benefit from both income and growth potential. Miniso Group stands out as an undervalued growth stock poised for significant returns. With its strong financial performance, aggressive expansion strategy, and attractive dividend yield, Miniso presents investors with a compelling investment opportunity in the retail sector. Number 3. Lithium Americas. Lithium Americas emerges as a compelling investment opportunity for those looking to capitalize on the burgeoning demand for lithium. As a lithium miner with a strategic focus on the commercialization of the Thacker Pass asset in the United States, Lithium Americas is poised to unlock substantial value in the coming years. While the company is not currently generating revenue, its potential for stellar growth upon the commencement of production is undeniable. This presents investors with a unique opportunity to accumulate LAC stock at undervalued prices and hold it for long-term potential gains. To contextualize the investment thesis for Lithium Americas, let's examine its market valuation and the intrinsic value of its flagship asset, Thacker Pass. Despite commanding a market valuation of $670 million, Thacker Pass boasts an after-tax net present value of a staggering $5.7 billion. Furthermore, with a projected mine life of 40 years and an average annual EBITDA potential of $1.1 billion, Thacker Pass represents a veritable cash flow machine. The imminent surge in demand for lithium, driven by the electrification revolution and the growing adoption of electric vehicles, positions Lithium Americas as a key player in the lithium market. As lithium prices trend higher, propelled by increased demand from industries such as automotive and energy storage, LAC stock is primed to experience significant appreciation in value. Crucially, the Thacker Pass project is well-financed for construction, bolstered by strategic partnerships such as the investment commitment from General Motors. With General Motors pledging $650 million in 2 tranches and securing an offtake agreement for lithium from Phase 1 for a duration of 10 years, the project enjoys a solid foundation for success. In essence, investing in Lithium Americas represents a bet on the future of clean energy and electric mobility. By holding on to this potential value creator with patience, investors stand to reap substantial rewards as the lithium market continues to evolve and expand. Number 4. DraftKings. DraftKings emerges as a standout opportunity among undervalued growth stocks, poised to capitalize on the burgeoning market for iGaming and online sports betting. With an increasing number of states legalizing these activities, DraftKings is positioned to experience substantial growth in the coming years. The legalization of iGaming and online sports betting in more states sets the stage for a significant expansion of DraftKings' addressable market. As regulatory barriers continue to fall, the company stands to benefit from a surge in demand for its services. One notable aspect of DraftKings' recent performance is its reversal of EBITDA-level losses. The company now expects adjusted EBITDA of $400 million for 2024, signaling a remarkable turnaround in profitability. Looking ahead, DraftKings aims to further bolster its adjusted EBITDA to $1.4 billion by 2026 and $2.1 billion by 2028, underlining its ambitious growth trajectory. It's important to note that these projections do not account for potential entry into new states, suggesting that DraftKings' growth prospects could be even more robust than currently anticipated. With a strong foothold in a rapidly expanding market and a track record of adapting to regulatory changes, DraftKings is well-positioned for healthy growth in the years to come. DraftKings represents an attractive investment opportunity for investors seeking exposure to the burgeoning iGaming and online sports betting industry. With a solid path to profitability and ample room for expansion, DraftKings has the potential to deliver significant returns to shareholders in the long term. Number 5. Amdocs. Amdocs stands out as an appealing investment option, boasting an attractive dividend yield of 2.18%. As a leading provider of software and services to the telecommunications and media industry on a global scale, Amdocs has demonstrated resilience and growth potential in its recent performance. With reported revenue of $1.25 billion and a substantial 12-month backlog of $4.21 billion, Amdocs showcases its ability to secure long-term contracts and maintain a robust revenue stream. Additionally, the company's guidance for a free cash flow of $750 million for the year underscores its strong financial position and cash generation capabilities. With a healthy liquidity buffer of $1.1 billion and consistent cash flows, Amdocs is well-equipped to pursue aggressive investment strategies focused on technology innovation and potential acquisition-driven growth. This strategic approach positions the company to capitalize on emerging market opportunities and drive sustainable long-term value for shareholders. A key catalyst for Amdocs' growth is the rising adoption of 5G technology, which presents a significant market opportunity. with the company anticipating a serviceable addressable market of $57 billion by 2025. Amdocs is actively supporting major telecommunications players in the launch of innovative 5G services and monetization opportunities. This strategic alignment with the evolving telecommunications landscape positions Amdocs to capture a sizable share of the market and drive revenue growth in the years ahead. Furthermore, Amdocs' projected annual free cash flow of more than $1 billion in the next 24 months provides ample headroom for shareholder value creation. This strong cash generation capability, coupled with strategic investments in technology and market expansion, underscores Amdocs' potential to deliver sustained returns to investors over the long term. Amdocs presents investors with a compelling opportunity to gain exposure to the telecommunications and media industry while benefiting from a steady dividend yield and potential capital appreciation. With a solid financial foundation, strategic market positioning, and a focus on innovation, Amdocs is poised for continued success in the dynamic landscape of telecommunications. Number 6. Coupang. In the wake of the pandemic, e-commerce stocks have faced challenges in recovering their pre-pandemic momentum. However, amidst this landscape of uncertainty, there are pockets of opportunity presenting attractive valuations, and one such standout is Coupang. Despite experiencing sideways movement in the last 12 months, its stock appears poised for a breakout, buoyed by promising financial indicators and compelling business metrics. Coupang's financial performance in third quarter of 2023 underscores its resilience and growth potential. The company reported impressive revenue growth of 21% year-on-year, reaching $6.2 billion, a testament to its ability to capture market share and drive top-line expansion. Additionally, Coupang's adjusted EBITDA of $239 million for the same period reflects its operational efficiency and profitability in navigating the competitive e-commerce landscape. Furthermore, Coupang's trailing 12-month free cash flow of $1.9 billion highlights its strong cash generation capabilities, providing ample resources for strategic investments and future growth initiatives. As Coupang accelerates its free cash flow generation, it is poised to attract investor attention and drive upward momentum in Coupang stock. A closer look at Coupang's business metrics reveals promising signs of customer growth and engagement. The company reported a 14% year-on-year increase in active customers to 20 million in the third quarter of 2023, indicating its ability to attract and retain a sizable user base. Moreover, the net revenue per active customer experienced a 7% year-on-year growth, signaling potential expansion in EBITDA margin. If average revenue per user, ARPU growth remains sustainable, Coupang stands out as a compelling growth stock in the e-commerce sector, poised for a potential breakout in the post-pandemic era. With strong financial fundamentals, robust free cash flow generation, and promising business metrics, Coupang is well positioned to capitalize on evolving consumer trends and drive shareholder value. Number 7. Riot Platforms. Riot Platforms presents a compelling investment opportunity, particularly in light of its association with Bitcoin, BTC/USD, and aggressive expansion plans in the Bitcoin mining sector. As a Bitcoin miner, Riot Platforms is well positioned to capitalize on the potential for Bitcoin to continue pushing higher in value. One of the key strengths of Riot Platforms lies in its zero-debt balance sheet, providing a solid financial foundation for growth and investment. With reported cash and digital assets totaling $599 million as of the third quarter of 2023, the company enjoys ample financial flexibility to pursue aggressive expansion initiatives. In terms of expansion, Riot Platforms has demonstrated a commitment to scaling its operations rapidly. The company reported a hash rate capacity of 12.4 exahashes per second towards the end of 2023, and anticipates increasing this capacity to 28.8 exahashes per second by the end of the current year. Looking further ahead, Riot Platforms aims to ramp up its capacity to 38.1 exahashes per second by the end of 2025, with the potential for further expansion to 100 exahashes per second in the coming years, if it exercises its option to purchase additional micro-BT miners. This ambitious expansion strategy positions Riot Platforms to capitalize on potential new highs in Bitcoin prices, which could result in robust free cash flows for the company. As Bitcoin's value appreciates, Riot Platforms stands to benefit from increased mining revenue, driving profitability and shareholder value. Riot Platforms represents an intriguing investment opportunity for those bullish on Bitcoin's long-term prospects. With a strong financial position, aggressive expansion plans, and exposure to the potential upside of Bitcoin prices, Riot Platforms is well positioned to deliver value to investors in the evolving cryptocurrency landscape. In conclusion, the essence of successful investing lies not only in identifying undervalued growth stocks, but also in exercising patience and maintaining a steadfast approach to long-term wealth creation. However, it's essential for investors to conduct thorough research, assess their risk tolerance, and consult with financial advisors before making any investment decisions. So, as you navigate the complexities of the market, remember to stay informed, stay patient, and stay focused on the long-term horizon. The journey to financial success may have its ups and downs, but with diligence and perseverance, the potential rewards are boundless. If you found value in this video, please consider liking and subscribing to our channel for more insightful content. Thank you for joining us at Simple Investing Secrets, where we strive to empower you with valuable insights on your path to financial freedom.